Right, Dance. Well, we've had a fair bit of action in crypto markets over the past week or so. I thought it'd be a good opportunity to get your thoughts on what's happening. A lot of people are obviously pretty nervous right now, wondering if Bitcoin and associated cryptos are going to zero, or whether this is the time to buy and the time to really, focus on what the crypto market's all about. So, what are your thoughts, mate?
Yeah, so as everyone probably knows by now, the price action in crypto this past week or even this past month has been pretty horrendous. And look, the falls of this magnitude always take me by surprise in some ways because, as someone who's so deep into the space and sees how much adoption's going on, seeing how much technology is actually developing new ideas and new markets, I always probably make the mistake in each cycle of thinking we're closer to that breakout moment into the mainstream, just like the internet probably did in 2007. I always think we're closer to that moment in crypto than we tend to be. So this my Achilles heel is probably being a little bit optimistic on the timing of these things, but I usually save myself crypto wise by also understanding that in these moments where prices are collapsing and everyone's saying this is the end, I save myself by understanding that it's not the end, and I realize that these times of maximum fear are the times where you keep interested, keep investing if you've got any spare capacity to do so. And if you're new to the space, this is the ideal times to start learning what this is all about, because the only thing you have to realize to be successful in crypto is to realize that it's not going away. And that's a message right now that a lot of people might not believe, especially if this is the first cycle you've been in, or if you're just an interested spectator. Because a lot of the mainstream people in finance, every time we have these markets, it doesn't change. It happened in 2018. It happened in 2014. It will happen today. They will say this is the end. And they say it all the time. But what you've got to realize, after 13 years, a technology with so much human capital, so much intellect, so much financial capital coming on board, not just from entrepreneurs now, not just from people in their basement creating ideas, but from venture capital firms, from big banks, and all of that. This is not going away. It is going to continue, and although it doesn't feel like it, and if you're invested in losing money, it can be hard to see this. But these are the ideal times to start drip feeding some money in. It could go lower. There's no one can tell you it can't. But you look at the peak drawdown in this period from top to the bottom is about 71%. Now that's almost as big a drawdown as we had in 2018-19 after that winter. And I can tell you, 4 years ago, the industry was nowhere near as developed as it is today. So it says to me, if we're not at the bottom, which we could be, but if we're not, we're very close. Now, why I think we could be at the bottom is that $20,000 on a technical perspective was the previous cycle high. So Bitcoin being there would make sense for that to be a close bottom. But last night we had a huge amount of fear in the crypto market, saying that there was going to be all these liquidations, people who had used crypto to borrow against, and they were going to get liquidated, and that was going to take the price south of 20K. And if that happened, then I suppose all bets were off, because in any market, when debt starts unwinding like that, it cascades, and you don't know where the bottom is. Now, if that did happen, that would be an unbelievable buying opportunity, because that's not people that want to sell. That's people that are forced to sell.
Yep.
And the hate and the fear would be at its peak then. But overnight, it appears that those liquidation fears have sort of, dissipated a bit. I did a lot of research yesterday into it, and I didn't see anything as bad as what the rumor mill was saying. It seems like some in the crypto space have managed to offload some of their indebted positions and managed to find buyers. So that helps them, avoid being liquidated. So I think the liquidation fears will start to dissipate. There's always the black swan thing, though, the thing you don't know about that hits. So the liquidation fears for the next week or two need to be kept an eye on. But after that, if they're away, then we need to think, well, why has Bitcoin fallen so fast in the last few months? And my sort of big picture thesis on that is that if we think about the rise we had from 2020, from $3,500 per Bitcoin all the way up to $69,000 per Bitcoin, I suppose the fundamental driver behind that was the macro environment. It was when COVID hit, we had a Federal Reserve Bank and central bankers putting interest rates to zero, near zero, and sometimes negative in some countries. And we had quantitative easing, and we had people in the Fed saying that we will print as much money as we need to keep the market and the economy afloat. And obviously, we saw the boom in the stock market from that. But that, for Bitcoin, it sort of, I think it highlighted the value proposition of Bitcoin as a scarce monetary asset. So I think a lot of people initially said, well, if the US dollar could be printed at will and interest rates can be at zero and every other currency can do that, Bitcoin suddenly makes a lot of sense. So if you look at the turning point in that sort of thesis was when the Fed and other central banks started getting worried about inflation and they've started tightening and increasing rates. And so that sort of caused that thesis to fall apart. And then we had sort of a snowball where that might have triggered the fall, but then we had, an insane amount of hype in the crypto space anyway that was probably due to come down a little bit in certain projects. And then we had that feeding into this sort of macro fear that we're all in at the moment. And then we had the liquidation cascade on top of that. So you had sort of like the macro environment changing, the Federal Reserve policy changing into a weaker economy with hyperinflation, which was something new, into a liquidation cascade. So that's that's quite bad. And that caused Bitcoin to fall. And in turn, that causes all the other cryptocurrencies to fall with them. And it causes a wipeout. So why 20,000 could be the bottom, though, is well, first of all, last night, we think the liquidation risk might be less than what people thought. But also we had, on the macro scene, we had the Fed Reserve increase interest rates by 0.75%. And the market, the general stock market, react positively to that. And you might be able to explain a bit more on that. But we also had the ECB doing an emergency meeting in Europe yesterday, basically backtracking on a policy of letting sovereign debt just react to markets, which they'd only done a week ago. So basically, we had the ECB saying, "Hang on, we will look after bond markets after all. We won't. We'll backtrack already." And I think Bitcoin observers would have seen those two things. One, that the Fed maybe is sort of signaling they are going to be more reactive to markets with their interest rate policy, although they're still targeting inflation. And we also had the ECB basically blink at the first sign of panic and basically say they will intervene in bond markets again. So overnight, Bitcoin did do a decent bounce. It's too early to say if that's a definite holding the line at 20K.
Yep.
But my fear indicators were off the charts yesterday, and the fact that we held 20K in such fearful times was a pretty good sign, I think.
Yeah, I've got a couple of questions. First of all, or maybe a comment just on the ECB and the Fed. I think Europe's a fair bit further down the track in terms of its economic slowdown than the US, and the US is still obviously battling that really high inflation number that came out at the end of last week. And just in relation to your comment there on the 75 basis point move by the Fed overnight, and markets actually rallied. Prior to that, the interest rate markets moved hugely. I mean, they priced in 75 basis points this week, and there's 75 basis points next month as well. So there's a lot of tightening that was already built into the interest rate structure going into this meeting. So the fact that it was 75 basis points, the market knew that. And often what happens is it's the sell the rumor, you buy the news. And when that news came out overnight, the market went, okay, well, we knew that, so therefore it's time to rally. Whether we're talking about lows in the US market, I think it's still too early, because you've got the Fed is still very concerned about the short-term inflationary pressures building further out into wages and all that sort of stuff. So the way I see it, they're intent on trying to put the US into some sort of a slowdown or a recession to squeeze that inflation out of the system. What I thought was interesting overnight is, for the first time in a long time, the oil price actually sold off quite considerably. To me, that's one of the main targets of the Fed. They want that oil price lower so it can then relieve pressure at the pump, and it relieves pressure on consumer wallets and all through the supply chain. Energy is a big price pressure all through the supply chain. So in the short term, higher energy prices are a tax on consumers, but they're also a tax via the inflation that spreads out through supply chain and all the costs that get passed on through that. There are stats that I've seen recently that the money supply, the money base, is starting to contract. Long-term inflation expectations implied by market yields are actually lower now than what they were a few months ago. So the market's actually starting to price in this slowdown. It's starting to price in lower inflationary expectations. But because the Fed is so intent on trying to, I guess, jawbone the market into letting them know that their interest rates are going to be higher, that's just having an effect on asset prices across the board. And you look at cryptos, and I see cryptos as probably at the pointy edge of the speculative asset spectrum. When interest rates are low and declining, money's going to pour into crypto assets. When you're taking liquidity out of the system, it's going to affect that. But as you said, the question is 20,000, and to have some perspective, 20,000 is a pretty robust price from the historical perspective of Bitcoin. Like, we're not, I think maybe 69,000 was such an outlier in terms of the amount of stimulus that went in the system in the past couple of years, that if you look at that as your base case, then 20,000 seems pretty low. But as you said, in 2020, it was $3,000. So $20,000 across the spectrum, especially if you're, say, a dollar cost averager, if you've been in the market for a number of years, then 20,000 isn't such a disastrous price. But certainly if you were buying in 2021, it's probably not looking too good. The other question I wanted to ask you is just in terms of that liquidation. So one thing I don't really understand is what that sort of means in terms of these crypto firms that have got borrowed crypto, borrowed Bitcoin, that if prices fall below a certain level, they're forced sellers. Is that how it works?
So what a lot of these, and there are a lot of like sort of big name VC firms that made a lot of money in this cycle, and they
VC being venture capital firms, like private
venture capital firms.
Private
Yeah,
investors,
there's a few. Yeah, venture capital firms like Crypto Focus, like 3AC is a big one. There's a few of them out there that are quite well known, and they made a lot of money in the early stage of the cycle, and they made a lot of money pumping projects and doing all sorts of exotic strategies that you can do in the world of decentralized finance. And one of the things you can do in decentralized finance pretty easy is leverage up your position. So, for example, let's say you held a $250 million worth of Ethereum, which is one thing I was looking at yesterday. Some of them use that as collateral to borrow US dollars or the crypto equivalent of US dollars. And they might have what they think is a conservative amount of collateral in there. So they might borrow, 50% on top of that 250 million. They'll take that 125 million and maybe they'll yield farm or, try and generate yields from that, or maybe they will stake it somewhere else, or maybe they'll invest it in other tokens, or maybe they'll put it into derivatives. Who knows what they're doing with it? But for the sake of that loan, as long as the value of that Ethereum backing that loan stays within some parameters, and it's usually about 85% is the loan to valuation ratio that they usually have to stay within, then they're fine. Whatever they do, that money is up to them. And as long as they can generate yield, they make a lot of return. So it's basically like any leverage strategy, you're magnifying your returns. And in crypto, where, triple digit returns are possible, putting leverage on that is why these companies became so rich. The downside to that is if we have these severe price declines like we had in crypto this past few months, and your $250 million worth of Ethereum is suddenly worth $100 million worth of Ethereum, and you've borrowed 125 million of that, you get margin called just like you would in any other asset, and you have to pay that back. Now, the problem is who knows what they've done with that money that they borrowed. Maybe they're in other tokens which they can't get out of, and suddenly they're having to sell other assets, which adds to this fear that's already out there. Like I said, think of all the fear that was out there in the general economy. In crypto, that was about times 10. And then you've got forced sellers just selling everything they can because they need to pay back this loan. If they don't, then what happens is that $250 million worth of Ethereum gets automatically sold for them by the platform that they've used at a certain ratio. So that then leads to, if there's a lot of that happening at once, that is even more sell pressure into an already weak market, which can be a bit of a self-fulfilling prophecy. And so that's what's been happening over the past month or two. And you've seen a few firms blow up. Most famous one was probably Luna, which we've talked about before. The most recent one is probably Celsius, which is, was one of these sort of platforms where you could do that, but it was a centralized platform. So the problem they've got is they were doing stuff with other people's money, and now they've frozen the withdrawals on that as they try and unwind these positions and try and get people's money back. That famous venture capital firm I was telling you about before, 3AC, They put out some cryptic tweet yesterday where they sort of said they're working with partners to resolve the situation, whatever that means. But that was taken as a sign that, oh no, they're going to be the next one to fall. Yeah. So I can't like underestimate how intense the fear was this week in the crypto market. And so when I say I'm quite happy Bitcoin survived that $20,000 mark, is because there was heaps of sellers. Everyone was selling. There was forced sellers. There was liquidated people. There was general panic. Twitter had even people who have been in crypto for a while, putting out we're in a long winter here. We've not learned. People who were bullish at the peak. Yeah, they were capitulating emotionally, and they were, I spent a day trying to find out what the facts were of all this yesterday. I was like trying to look into on-chain data to see, is this liquidation going to continue? Is it a real risk? And my answer is I don't think so, but I don't know for sure. And I've tried to sort of help some of my subscribers with that possibility, while still actually I am still very bullish once we get over this situation, because this is the big difference between the crypto market and the traditional market right now is that in crypto, this will get washed out. People who can't handle the leverage will get washed out. Firms will go bust. Projects that don't survive will die off. Developers will leave. Interest in hyped up projects will fall away. So you do get this cleansing, and it's brutal, and it's horrible if you're stuck in positions, or even if you're in good projects that just get hit by this general sentiment and you're down, which happens. It feels bad, but what it does is it washes out all that crap that built up in the boom times. And whatever's left is the seeds of the next bull market. It's the real technology. It rewards the good projects, the good managers, the good investors, and that's the extreme moments of opportunity. And this might be my fourth cycle, and the story never changes. It's
just
comes in on the.
I was going to say, just listening to you talk about all the fear and the liquidations. If we were in the traditional financial sector, there'd be a stream of people out there telling you, there'd be a lot of fear out there, right? But there'd be a lot of people telling you that this is the time to buy. You buy when the blood in the streets. This is as bad as it gets. You should be buying right now. Whereas the only thing I've heard from a mainstream commentator, I think I saw a comment from Bill Gates saying that crypto is just a manifestation of the greater fool theory. So the people still putting the boot in. But I think it's important for listeners to realize that this is the time. This is almost as bad as it gets. And as you said, we don't know if there's another leg down, but history tells you when there's panic like this, when there's fear like this, it's all in the price. And that's when you've got to continue with your dollar cost averaging strategy, which we've talked about, forever on for new money investor. And if you've got the spare capital, and if you've got the time frame to be able to endure another few months of pain, or another 6 months or whatever, I'm pretty confident that in a couple of years' time you can look back on this period and say, well, that was the right call to make, right?
100%. So the long-term thesis for something like Bitcoin hasn't changed. It's an alternative store of value asset that lives on its own network, is censorship resistant, free from government control, allows products to be built on top of it, like any platform, which could allow super cheap payments, transfers of value, a bunch of stuff being worked on from the technological side. So none of that has changed. You get a lot of people in the mainstream gloating, saying, "Oh, I thought Bitcoin was meant to be inflation resistant, or I thought it was meant to be a store of value." And it's true. Like right now, it's not perceived as that, but that doesn't mean it's not that, and it's not going to eventually be perceived as that. I think you've got to remember the pathway to creating a new store of value asset don't come around very often, and to expect something new to suddenly be accepted as that without going through the trials and tribulations to get there is unrealistic. And so this is just part of the learning process.
And as an aside, just to that point, Ryan, I'd say that inflation is, like we talk about leading and lagging indicators in economics, right? Inflation is probably one of the most lagging indicators you can have. So Bitcoin was pointing towards this monetary inflation last year. When the Fed started raising rates, it started saying, well, there's not much monetary inflation coming down the track because the Fed is raising rates, inflation's picking up, real interest rates are increasing. And if you talk about, people putting the boot into gold as well, saying, well, it's been a great inflation hedge, hasn't it? This my point is that the inflationary times is behind us. We're sort of moving. Asset markets are deflating, and that deflation is going to spread to the broader economy in time. I mean, it's not going to happen next month. It's not going to happen the month after, but it will happen.
Yeah.
And central banks will respond to that, whether it's later this year into 2023, by halting their interest rate rises, and at some point they're going to turn around and lower rates again, and that's when this money will come back into the sector.
You're 100% right, and I think people need to understand that markets these days our economies, should I say, are inherently deflationary. And technology is a deflationary force in the world. I think what we'll find through whatever energy transition we go through as well is energy should be deflationary. The reason a lot of inflation's in that now is through government meddling, through that is why these things are turned into inflationary forces. The lockdowns, the energy, the sort of uncertainty around energy policy has resulted. The money printing, the interest rates, that's all contributed to this wall of money, which has then created this perfect storm. And then you've got Ukraine and Russia exacerbating stuff. But in reality, they're all temporary measures, a temporary sort of phenomenon that have come together in a perfect storm. Inflation's not going to be with us for 10 years like it did in the 1970s. You know what I mean? It will get under control a lot faster. And as you said, by the end of the year, by 2023, probably, and I would agree with you on that for sure. Coming back to crypto, the last point I would make, I suppose, with regards to opportunity is you said before, in traditional markets, you'll be getting all the mainstream telling you to buy now because there's blood in the streets, and you don't get that in crypto. But that's why it's such an insane opportunity, not to go all in or anything like that, but to start getting interested, because you just got to think of market dynamics. Something's been beaten down this low, has no love from anyone, and can still maintain a price level at a certain level. You are, from just pricing dynamics, you are pretty much left with the true believers holding it. So just from the sell side pressure can't get much worse. Whereas the buy side pressure, as this technology develops and starts getting integrated into everyday life, is immense. So just on a purely risk reward basis, it is counterintuitive to a lot of people emotionally, but it is the best time to start getting involved. And I've looked at like previous bear markets in crypto and in Bitcoin, and they tend to last. They can last anywhere from 3 years to 2 years, but over the cycles they've been getting shorter and shorter, which makes sense as the technology is becoming better and more adoptable. Yeah. And I would be very surprised if we're not back in a bull market in line with what you were saying about inflation, in line with a sort of more generous macro environment by October, November this year. I don't think it will be a big, long, brutal market. And I think the faster we fall right now, the faster we'll recover as well. And specifically for new money investors, I have got a monthly report going out next week, and I've got a new recommendation in that for subscribers. Because I just want them to take advantage of this down market and get into a new project. One of the most exciting ones I'm excited about, to be honest with you. It's got applications beyond the crypto market as well, which is a reason I think it's not a bad one to get into now. And I'm going to try and release that next week. But what I would say to the subscribers of that service, don't lose interest now. Don't if you don't need to invest more if you don't want, if you can't handle the falls, you don't need to put more money in. If you can, and if you believe in it, dollar cost averaging is a smart way to do it. And next week, I'm going to try and present an opportunity in one project, which I think is a good one to have think of these as speculative investments always. Don't think of them as a big part of your portfolio, but it is this is the time to speculate on good projects.
Pretty sound advice, mate. I know it's not easy to put out those recommendations when markets have really turned. But we know from history, and we know from the way sentiment works, that is the time to buy, and it's the right thing to do. So I look forward to seeing the monthly out next week. And thanks for your time today, mate.
No worries. Thanks, Greg. Cheers.
Yeah.